Okay. Well, in my case, I'm not. Well, I don't think I understand completely why the ESR does not apply to this business.
Well, that is not part of the content of the class, so don't worry if you didn't get that. It's not gonna be in any exam, or it's not gonna be asked inside the raw case answer. But the reason is because this business in particular is registered inside a facility. It's not called facility. I'm sorry. It's registered inside a simplified tax regime that grants business here in Mexico a discount of 100% on the income tax the first year, and that's the reason why this business doesn't have that tax there.
Okay. Thank you very much.
You're welcome.
Sorry, I did have a question about the direct cost, no, indirect cost or expenses.
What is your question?
Like I don't understand. Like I can see really the activities that the raw cases have for them to produce like those indirect expenses. Like where could you give like an example of them?
Like in the raw case?
Yeah.
I don't think I am understanding the question.
O sea, es que ya ve que hay actividades, o sea, gastos indirectos. Like, I don't know, like the activities that will produce them. Do you have like an example of any activity?
It will produce an indirect cost.
Uh-huh.
Well, inside the raw case, you say?
Yeah.
It could be the supervision of because if you remember, there is a part when you have to wait for the flowers to actually settle, like I think 7 months something. There you have supervisors, and then there you will have, that will be an indirect cost, the cost of those supervisors, for example.
Okay.
Remember, the general rule is that it's not clearly identifiable inside the object cost, the cost object.
Okay.
I don't feel that okay is like a secure, okay, teacher, I understood. So, how can I explain you more? Indirect activities. Well, this study is not related directly with the cost object. For example, well, supervisor is the most common example of that. But also could be maybe the cleaning of the facilities. That could be also an indirect activity. The design of the pots where you put the flower, that can also be an indirect activity. What else?
It could be like the transportation of the plants or something like that.
The transportation of the plants to where? To the store or from the vendor to the business?
No, to the store or maybe to the clients.
To the clients, that will be a sales cost.
Okay.
Yeah.
Okay, but now I'd like to see the difference because I didn't like remember the difference.
Well, the thing is here, and again, this has to do more with the criteria used by the person registering the expense. You know, and I'm telling you, like, the general criteria, it's not related exactly, I mean, directly related with the product that you are selling or the service you are providing. So maybe in your case, you are the accountant for the business and you say, well, I want to actually identify the freight cost to move the products from the factory, the flower factory, to the store as a direct cost. And you may do that, and that will be your criteria. And for you, and the presentation of financial statements will actually be correct, but you need to actually support that. Why is it that you actually take it as a direct cost? You know? So again, and if you read about the financial norms and normas internacionales de información financiera, one of the main, with the general, one of the general concept of the notes is actually that you need to use the professional criteria to do the registers. So as a professional that has worked in cost accounting before, I can tell you that I have seen the freight cost for a business that is not actually dedicated to provide that delivering service. to put that cost as a sales cost. That is as operational expense because it's not core of the business. Other businesses that actually dedicate their business to deliver the product to the final consumer, of course, those services, those businesses will have the freight cost inside the direct cost account. Is that clear, Nadia? Or are you just more confused?
Like, for example, for Amazon, that would be like an
Yes, excellent example. Yes.
Okay.
For Mercado Libre also. Yeah. For a business, not like Amazon, Mercado Libre. For example, I have a customer that they manufacture pots and pans, and inside their value proposition is that they only sell to big suppliers. So they actually gift, like sort of saying, the freight, the delivery cost to the client. That is, the client will only buy them the pots and pans, like 300 or 600 pots and 600 pans, if they deliver the pot and the pans inside to the client's store, right? So their business is to manufacture the pots and then to take the pots to the customer's store. So for them, the freight cost will be a direct cost, because without that, they cannot sell their product. You see the difference?
Yes.
Okay. Other question, guys, from financial statements?
No, teacher.
Okay, so let's move to the next part of the class. That is, let's start talking about cost. So this one is called a statement of cost of good manufacture. Now, I'm not going to get too much into it because we are not going to be using it per se. That is more for an advanced accounting class. And all I want you guys to know is that this statement is related with the inventory of the business, all right? So what is inventory? That's the important thing that we need to know. That is something that we need to learn and we need to identify and work with. So the inventories are items that you purchase to sell, all right? Items purchased and held for sale, okay? So merchandise by retailers, blah, blah, blah. Inventories include items. This is really extremely difficult to understand. So all you need to know is that you can find the complete definition in this financial, note, I'm sorry, it's not called note, in this section of the International Financial Reporting Standards. And I'm gonna give you a summary of that. So what is inventory? This is the definition that you can copy paste from there. So not taking that, just taking the important parts of what is an inventory. Inventories, and look at the blue. Inventories are purchased items to be sold. It includes items produced and in the manufacturing process, raw materials, and other materials. So inventories are things that you buy because you're gonna sell them. In a business, if I buy something, like for example, inside a business, an office, if I buy paper, pens, glue, clips, stick notes, all of that, is that an inventory?
No.
Why not?
Because you're not going to sell it.
Because
right?
I'm not going to sell them. That's a supply.
You're
Exactly.
Yeah.
Exactly. And what if I buy all of that and I own a papeleria?
Then it is inventory.
Then it is inventory, because included to produce and its manufacturing process, blah, blah, to be sold. That's the important part. You are going to be selling them. And it also includes, of course, the products that you are producing. So one of the inventories is producing. Also the ones that you manufacture, raw materials, and others. So also raw materials is an inventory. And if we go up, the purchase items, that is products to be sold, right? So you will call them products. Okay, these are actually the three types of inventory you will find. Items being produced, items produced, or inventory of items you just purchased, and raw materials. So what are inventories? Are items, I'm sorry, items, which an entity maintains for sale, all right? If you buy something to be sold later, it's an inventory. They include items produced and in process of manufacture, also raw materials and other materials or supplies for production. For production, that's the important part. Either you're gonna use them to produce something that you're gonna sell, or you're gonna sell them. You cannot classify inventories of just supplies inside an office, for example, or even inside a factory, supplies for the factory that are not meant to be to the production. Those are not inventories, okay? All right, so how do inventories move inside the business? Well, you start with raw materials, then you go to production in process, and you end up with finished products. And that goes to be sold, right? Inside the product case scenario, tell me guys, did you guys actually saw this process when you did the diagram of the process of the business?
Yes.
Did you start with raw material? Oh, yes. So which, like, can you explain me who actually spoke?
It's me, Miss
Okay.
Kyle.
Okay, Misael. So how did you started like all that?
I think we take the first the suppliers, and in case of the order of our client, and we put then that the process of I don't know the produce what the clients want, and there's finished products, and then I think we focus on the delivery or something, but we start with the suppliers.
Okay, you start supplies, then you go to the production process, and then you wait, right? There is a waiting time, then it's like a checkup and all of that.
Yeah.
So here you have a bunch of activities that you follow, and then you end up with the finished products, which are actually the violets, right? And that's what you are selling, right?
Yes.
So as you can see, it's the common way products will move inside the business. That is, you go from the raw materials, then you put them inside a production process, and you end up with finished products. Okay? So before I move to this part, because now we're going to start seeing like the important part of the course. Everything is important, of course, but the first part was more like a review of financial statements. This is actually the part where you need to apply this, what is next inside the raw case scenario. So this is part of the answer you need to give, okay? So before I move into that, I need you guys to tell me if it is now clear, where do you find the inventory? That is the balance sheet. And what is the inventory?
Yes.
Okay. So now we need to move inside unit cost valuation methods. The thing is that when you actually have inventories, and just think about it, how did the business got, like the flower business got to these numbers of inventory? What do you guys think they did it? Hello? Open your microphones, guys, and tell me, how do you think they got into those values of inventory inside the balance sheet?
Teacher, I don't understand your question.
Like, for example, you have a value of inventory here of Petmos, 5,239 pesos. How did they get into that value? I mean,
Well, don't they see like how much is demand or their consumers is demanding?
and then you just buy that, and how do you register that? Like you see at the invoice, right?
Yes.
Well, what will happen if you have Petmos from different periods, like for example, 2 years? What is the value you will write there? And how will you get to that value? And what will happen if you have, like, now this is small business. Well, maybe you could think, what is this teacher asking? Of course, they just went out, saw at the invoice, and they just write the number in the invoice, right? What happens if you have like 1,000 invoices from a huge, from a really big facility, like a really big inventory warehouse, you know, and then you see like thousands of products there. How do you actually get into the number of the inventory you need to register? No?
No, teacher.
My question is not clear. Like the question is, how would you register the inventory? I mean, what value would you take and why that value?
Yeah, but I think you need to take the price of the material, right? For example, I don't know if it is the 5,000 is the cost of what
Okay.
the company pays.
Okay, and why if the Petmos there is actually not being bought but produced inside the company? What if? Then how would you know how much to register inside the inventory account?
It isn't because of the history sales.
Well, that will be maybe to do like a purchasing budget. But just how would you connect the sales to the value of the inventory? Maybe there is a way to connect it.
Maybe with the cost of goods sold.
Well, the cost of goods sold is actually, once you have valuated the inventory, the part of the inventory that you take to the income statement.
Maybe you just reduce or like take away the value of the sales cost, because it won't cost you until you are going to make the sale, so it shouldn't be directly included in the
Okay.
inventory.
Okay,
And
that's good. Okay.
and maybe also you can like, the thing is that for your final price, you obviously need to know what does the actual product cost you, considering that either the raw materials, the processes that you make to transform it in whatever you're going to sell it, then you need to calculate like all the things that you're going to spend money on, including, for example, taxes. And then you set like what's the margin that you need to make in order to like be a profitable company. So taking away all of that and just going into the value of the raw material and whatever it costs you to process it into having that exact product on your inventory, that should be the only value that you should give it directly in the inventory, right?
Okay, and how do you get to that value? Because you just explained a lot of really
So maybe
complex
you
steps.
just take away the cost of sales,
But
your margin.
the cost of sales is the value of the inventory. So it will be a question of what is first, the egg of the chicken. So if you take away the cost of sales, you need to know how much the inventory is valued. And you are actually explaining a really interesting way of valuing the inventory, which is the production of the product you are selling. But how do you do that? Like, what do you put in? What do you
Maybe
take
with
out?
expenses.
Expenses.
Like if your
But
expenses
it's a good answer, Guillermo. It's actually the right answer because you are
Yep.
going to there. The thing is that, how do you do that? Because if you tell me, well, you need to, actually what you are telling me is you need to do the cost valuation of the product. And then you need to deduct that cost from the sales, right? And my question is, okay, well, that cost comes from the inventory. So how do I evaluate that inventory to generate the cost?
Yeah, I totally get it. Because if you don't have your actual, like the amount of money that you're going to sell it, then you cannot do it the way I said, right?
Exactly. You like
Yeah.
that what you're saying is correct. You are just one step ahead. So what I'm telling you is like, go back and tell me, and that's what we are going to learn right now. I'm gonna tell you how to evaluate the inventory. All right. I just want you
Yeah.
guys to start thinking like, how will I do it if I don't know any like technical process? How will I evaluate an inventory?
I would probably just put the amount of the inventory to make it every amount, like every cent that it costs you to get that to putting it in your like warehouse or wherever you have it, all of the money that it costs you to get that specific product, I would make it that the value of the inventory.
Right. So I think, thank you, Guillermo. I think you all guys have the right idea. And someone else wanted to talk, but Guillermo was speaking, so I'm sorry for interrupting you. Did you want to say what you were saying? I think it was Nadia.
Yes, sorry. I don't want to be the one who's always speaking. Who's talking. But Maybe through the short-term finance methods, because
What is the short-term finance method?
I think that that's the way you actually pay for your inventories, and in that way you will know like the volume. If you spend like 5,000, you have like in your inventories you have to have like 5,000 in general.
Okay, so you will just take how much you paid for the things that you bought, and you will put it in the inventory, and that's it. Yes, Nadia?
Yes.
Okay, and Guillermo says he will actually do a whole process to find out how much each product costs, like look at all the process and put every cent that it costs of activities and raw materials and all that you have there to find the cost of the inventory. And he actually also said that he will do that and also look it against, well, no, it was Katia, I think, who said that she will look it against the sales, right? Like she will look at the sales and then she will somehow figure it out how to evaluate the inventory looking at the sales.
Yes.
Yes. Okay. So you have like some, you have a valuation method. Nadia says it will be like how much I pay for it. Then you have a valuation method that Katia says that is somehow related with the sales. And then you have a last method that Guillermo says it's related with the process of manufacturing the product. Am I correct? Guillermo, Nadia, and Katia?
Yes.
Yeah.
Yes. Okay. So I don't know if you already took this class because you actually defined or told me like in really general terms, but actually in the right direction, the three methods of inventory of unit cost inventory evaluation. That is acquisition cost. I'm sorry. That is acquisition cost, retail cost, and the standard cost. And it's actually related, we are going to see it on detail, but acquisition cost is just as it was actually Nadia who gave the idea. Then retail cost will be Katia's, and then standard cost will be Guillermo. And again, you didn't explain like on detail like how to do it, but actually I'm getting hints that that's what you were thinking, and you were actually kind of correct. And what I want you guys to think now is that even though it's a little bit not complicated with a maybe mixed, like maybe it has a lot of information. These three methods of unit valuation cost, they are not difficult to get because you will get there with logic, just thinking of how will I evaluate this inventory? How will I put the money there? Well, these are the three types of unit valuation methods. So it's 8:44. I think there is time to see one valuation method because it's actually pretty simple. That will be the acquisition method, and we will leave the rest for the next class. So the first valuation cost, the first unit valuation cost, it's the acquisition method. And the way you register this is it's the amount of money you pay on cash or cash equivalents for the asset or the service at the times of its acquisition. Pretty easy. It's how much I pay for this thing I'm going to be selling. That's what Nadia said. I will put the value of the inventory, how much I paid for the pet moss, for example. That's the valuation method using, that's the acquisition valuation method of the unit cost in the inventory. Let's see an example, for example. Let's see an example. The example is this. I want to start a business and I want to sell these really cute cups, they are actually made out of peltre and they are 349 pesos, all right? So this one will be my acquisition cost, okay? Cost of acquisition. So how will I evaluate my inventory? Well, if I were to buy 300 sets of cups and a cost of acquisition of 349, my question to all of you, and especially Nadia, which is the one who actually thought of this method, is how much will my inventory be worth? How would you evaluate the inventory with this information, thinking about the acquisition method?
Would you
10,000.
multiply 300 times 349, right?
Yep, that's it. That's how you will evaluate your inventory. You will take the amount you paid for the units, that is the acquisition or historical price, and then you will just multiply by the units that you bought. This one times this one gives you the value of the inventory. Really easy, you see?
Yes.
Okay. So 846. I don't know if we
Yeah,
should
but
see the
what if
next
it's
one.
something you're manufacturing?
Then you can let's talk into that, so we don't need to move into the next one, because I think that's gonna take us more than 20 minutes, and it's almost, the class is almost done. So I want you guys to stay with this question Nadia just asked. What if you are manufacturing and you are not buying it like to be sold? Can you use this method?
Yes, right? Because you would just do all the cost that it's like you need, or like all the materials, the cost of all the materials to make that good, and then how many goods you are making. Like imagine like if you are making 100 flowers with those raw materials, then you would just multiply that, right?
You will just multiply the units by the value of what you bought. But I mean, for
But you
example, here you
also,
have all of this. So how would you get this inside the violets? Just as Nadia just asked.
Well, so like if it's
I mean, well, you are telling me I should just add this up, and if I
no,
were to do 100 flowers, I just divide this times like by 100, and that's the value each flower is going to cost me.
oh, if yeah, for the PMOS, for example, you would just divide the amount of PMOS that you have with that number.
But
And
now
then
we are dividing, and we bought the PETMOS. My question here is, are we using right now this method of evaluation?
no,
So we cannot use that method when you are manufacturing, right?
correct.
Okay, you are right, exactly. Which method would you think we're gonna be using?
Then it would be the other method that you were talking about,
The one that Guillermo described, right?
the standard, I don't know what.
The standard, I don't know what, it's exactly correct. The standard cost. Okay, so next class we're gonna see the two next, that's the retail cost and the standard cost. This one is the long one, the standard cost, and actually the standard cost method is the one you are gonna be using to evaluate the unit inventory, the unit cost of the violets. Okay. So we're gonna end the class here, so you have 10 minutes break. If you have any question, write me to remind or send me an email. I will upload this class. Unfortunately, the first part of the class it's lost because I wasn't the host, and I was looking at Zoom and it's not saved. So, but don't worry too much because it's not content for the answer of the raw material. And again, I will upload the PowerPoint, so you can also check the PowerPoint. Do you have any questions, guys?
No, thank you.
No, thank you.
Okay, guys.
No, thank you.
So see you Wednesday. Have a good day.
Thank you, you too.
Thank you.
Have a good day.
Bye.
Thank you.
Bye.